Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel, day trading for an ROI payout. It's just my trade journal, rule-based price action trading, and this is the market analysis I do before I press buttons. Daily affirmation, I see it and understand. Rigid discipline and rules, flexible and outcome expectations, independent thinker, impeccable risk manager, precision-based trader, responsible business manager. And here we are, price action order flow levels, Tuesday, September 12, 23. So here's what's jumping out. Far left, 1 hour. I'm going to zoom in on this on the benchmark later, but basically you can see here there's a red rectangle from yesterday, which is a 5-minute order block rejection that I'm using here as the basis for being short. The daily has a larger left green. We've talked about this big green candle, okay? Just remember, this is the big thing from the buy side imbalance, sell side inefficiency candle, where a large fair value gap was formed on that thick black line above and the thick black line below. And price has been basically meandering in between both of those two black lines for several sessions. And then the dollar holler, DXY, DAXY, that's up and it's continuing to remain bullish. Yesterday's black candle came down and dug into a green candle fair value gap, but it didn't really go and breach the 50% line. So that means we are still in a bullish zone for the dollar, which means you can't be bullish at the same time with the equity indices. It doesn't work like that. So basically, that's the overview. Let's go to the benchmark 15-minute and look at the levels. Here we have the 15-minute benchmark, and so I really was focused last session, previous day, on how we closed. And you can see here what I have here on the silver bullet PM session is how this 5-minute pinkish rectangle was respected on the top. Notice how the bodies of the candles stay within this rectangle, not the wicks, but the candles basically did respect. Measured a 9 to 10 order block, and it lasted the whole day as resistance. So that's a rejection zone. So then we had today for Tuesday, the silver bullet. And what I did was I noted here a 30-second order block within the Europe Globex zone. And I've got two blue line railroad tracks. If we go above these two blue lines, that's bullish. And I want to be not having any shorts on, basically. And you can see here, this black line, this is the relative lows of the Globex. We're about to open RTH in less than an hour. And basically, right here, we really haven't gone below this line too much. But if we did, this is the low that I'm looking for to touch. So this is basically got a daily volume imbalance prior from an earlier session, and its consequent encroachment, as I've already stated on the intro video for the 24-hour session. Then below that is the new week open gap. So it's all about seeing where we're going to open for the new day for Tuesday. I'm only going to trade here for a couple of hours in the RTH. This is a super busy week. I'm changing out offices, internet connections, so I'm having only abbreviated opportunities to trade. But if we don't hit this red line, I'm not going to do anything because of CPI, because we could jack back up here into this red and even go above it and test this daily fair value gap. So if not low on the red line, the above would be 45.46 to test the E-mini S&P day fair value gap of the August 30th upper zone. And again, that came from that big long green bar on the top of the next day that created that fair value gap high. For ICT students, you know what I'm talking about. For the others, you just have to dig into the videos that ICT puts out to get these things. But it's coming together for me. I've been over 6 months into his concepts, and I don't take his word for it. I back test it. I trade it with live money. I try it out. I find my model. And I've had better results than anything else that I've used the last few years, so I'm staying with it. So that wraps up, again, abbreviated videos this week because I've got abbreviated trade sessions and one more abbreviated video coming out for Wednesday. So again, that's CPI. We'll see how we do today. And again, the levels we've laid out here, I'm sticking with this benchmark on the lower levels, and I'm just looking for respect versus no respect. And right now, we're respecting this line 45, 27, 25. Okay, that's a level. I'm looking for 45, 20, 25 with the runner. And if we don't get that and we disrespect these two railroad blue lines here and here, there's two sets of them, then yeah, higher prices could drive this thing back up to front run the CPI. That's my thesis, and I'm sticking with it. Aloha and take care. Thanks for watching. Bye.